Let's get more on the market today. We're joined by Colin Cieszynski, Portfolio Manager and Chief Market Strategist at SIA Wealth Management. Colin, great to see you. Thanks very much for joining us.
Oh, thanks for having me.
The US labour market is one thing you've been watching, and you are seeing signs of weakness there.
Absolutely. When we just look at the numbers that came out over the last day or so, we saw ADP payroll growth less than expected. We saw the layoffs were a significant jump from a month ago, and the job openings announced yesterday were less than expected. So it's just starting to feel like the labor market in the States is weakening, and even in the forecast for tomorrow's non-farm payroll report, people are looking for less than 100,000 jobs. I mean, routinely when you're in a good economy, you're getting 200 or more. I mean, it's pretty late. In Canada, we're hoping for a rebound after a pretty dismal month last month.
We've got stock markets near record highs, or in Toronto we're at a record, but there are concerns about a slowing global economy.
Yeah, and we're seeing it in a number of places. Obviously, we're seeing it in the talk of the Fed maybe going past 25 basis points to a 50 basis point cut. You do that when your economy is starting to slow, but we're also seeing it in commodity prices. We're seeing some weakness today in both the price of crude oil and the price of copper, and copper in particular is quite sensitive to economic conditions around the world, and it's been starting to weaken lately.
Let's have a look at a 5-year chart for copper. Of course, Teck, well, it's interesting with Teck Resources. That stock jumped yesterday. They thought they're paying attention to problems at their Chile mine. Investors were encouraged by that. But yeah, the Teck stock giving up some ground today. What is it a certainty the Fed will cut on September 17th?
Well, I would think it's fairly high, and it's not just from pressure from the White House. There's also been, for a long period of time, pretty much all of the last year, the Fed has been saying, we think we'll cut interest rates twice this year. And they're running out of meetings. So if you were going to go to a quarterly rate cut program, then you would do one in September and you do one in December. So that probably seems to me to be what they've been kind of hinting towards, not just recently, but for most of this year. So it still looks like it's kind of out there as a possibility. Other central banks have cut a lot more than the Fed has, and even in the closest to them has been the Bank of England, and even they've cut interest rates a couple of times recently. So there's room for the Fed to do a couple of cuts this year, but you might see more like 225 basis point cuts rather than the 50 or more that people have been calling for.
A couple of stocks that are on your radar, funds you own, funds you help run, own them. Start off with Broadcom, the tech player, the supplier of specialty chips. Why do you guys see upside there, Colin?
Absolutely. What we're seeing with Broadcom is their relative strength has been fantastic in our relative strength rankings of head-to-head battles of major companies in the United States. They're number one right now. They are winning and doing extremely well. Some other sectors that are doing well in the States include the banks. A lot of the big banks are also really strong, but right now Broadcom is number one. We'll see what happens with it tonight. They're reporting earnings after the close today, so then we'll see what that happens in the morning. Because one of the things we have seen over the last number of months, and you alluded to it a bit before, was that we've seen some pretty big swings in both directions off of earnings reports. And so we could see there is the potential for a move in the stock one way or another tomorrow, depending on how the numbers shake out.
And Kinross, gold stocks have been darlings. Is there something in particular you like about Kinross, Colin?
In the head-to-head battles in Canada among the large cap stocks, Kinross has been number one. And for the last year, we've seen good gains across the gold sector, but Kinross has gained more. And it's not to say that the others haven't been winners too, but of the group, it's been the biggest winner to date. It's still winning all the battles. And when we look at the top of the Canadian rankings, right behind it are a lot of the other large cap gold names. So gold stocks in general are continuing to do well. We're seeing weakness, not just in the US dollar, but also gold is gaining against all other currencies right now, and that's a sign that we talk about the Fed cutting rates, but other central banks are cutting rates too. The Bank of Canada has been talking about maybe starting to cut rates again after pausing for a while. The Bank of England cut rates. The Europeans have been cutting rates. The Aussies have been cutting rates. Everybody's been cutting rates and weakening their currencies relative to gold. So gold continues to do really well.
Do you like to have a ballast of at least some gold in your diversified portfolios?
Yes, we do. We do. When gold is running and when gold is showing relative strength, we do own gold positions along with other positions. As with other institutional managers, we do have sector limits, so we can't own all gold stocks, but we do have a reasonable amount of gold stocks across our portfolios.
Colin, thank you very much for joining us.
Thank you. Have a great day.
Colin Cieszynski, Chief Market Strategist at SIA Wealth